Hello everyone, welcome back. Today we're going to talk a little bit more about Kubota Credit Corporation and the 0% financing program. I did a prior video on that and I want to make a couple of corrections based on some additional information that I got. And the additional information is that they will let you buy this machine, right? This is a brand new L3901. They will let you buy this machine without the extended warranty and without the insurance if you can prove insurance to the corporation. So you can get insurance to your bank or whatever. And that's significant, okay, because what that means is that that's not where the interest is, okay? So the interest is already in the price of the machine. Now, for those of you that are new to my channel, my background is an accountant. I've done accounting for many years. And way back when I was in school, one of the classes that I had to take was called the time value of money. All right, and basically the basic idea of that is that a dollar today is worth more than a dollar 7 years from now. A couple of reasons is because, first of all, if I have that dollar now, I can invest it and I can use it to make more money. The other thing is that I don't know how things are going to be 7 years from now, so there's some risk involved, okay, and I got to be compensated for that risk. The other thing is inflation, and that's probably the biggest factor today, the rate at which the government is electronically printing money, and they're printing a lot of it, right? They're talking about increasing the national debt by $3 trillion. The number trillion is an insanely big number. A trillion seconds is 31,000 years, so they're not borrowing this money from anybody. They're not going to pay it back. This money doesn't exist. They're just electronically creating it, okay? So these are things I covered in my prior video. In this video, I want to focus on the ways that we actually evaluate the true cost of an asset when they tell you 0% financing. Now, I'm not here to say that the 0% financing program from Kubota is bad. In fact, I like it a lot. I used it to buy this machine. I used it to buy another machine back in 2013. It was actually the same machine. This is the L3901. That was the L3800. Same machine, basically 38 horsepower machine, with the loader. Same exact machine. I keep that at a different location. Now one of the interesting things is I went and I looked up what I paid for my my L3800 back in 2013, right? So in 2013, basically I had entered into a 60-month contract where I was paying $387 a month for a total of roughly $23,000. Okay, so the cost of that machine, and that includes insurance, warranty, all the interest that's wrapped into that, was roughly $23,000. So the same exact machine, other than the DPF and some minor changes that they made to it, but roughly the same machine in 2021. All right, I got this over 7 years. Basically, it was basically 84 months. My monthly is $405, so that comes out to $34,000. So we're talking $24,000, all right, compared to $34,000. So the amount of money that you're paying for this machine, dollar-wise, has gone up by roughly $10,000 from 2013 to 2021. Now, the important thing to understanding that is that the machine itself, the value of the machine really didn't change, okay? This machine, my L3800 does the same amount of work in 2013 that this L3901 does in 2021. So the only thing that has changed here is the value of the dollar, okay? So when we look at these two machines, and there's videos on my channel of my L3800 working. I was actually using it this morning, and I posted a video of that. So from 2013 to 2021, the value of this machine has not changed. It does the same amount of work. The only thing that has changed is that the money, the value of the dollar, has decreased, okay? So whereas in the past I would have to pay, in 2013, paid $24,000, now I'm paying $34,000. So that's the important thing to understand, all right, with regards to money. So now that we understand that the value of assets really doesn't change, it's more the value of the money that changes. Let's talk a little bit about the 0% financing, and a calculation that's called the present value of an annuity. Okay, because that's basically the calculation that we would have to make to get back to what the value of this machine is. So once I removed the warranty, because what I did is I took out the warranty, I took out the insurance, and I also took out the sales tax. Okay, so before all that, the base value of this machine that I have right here is $28,000. Okay, so dividing that by the 84-month period, okay, that comes out to a monthly payment of $333. Okay, so that's what I would have been paying for this machine if I wasn't paying the sales tax, extended warranty, and the insurance, which I'm happy to be paying for because that has value to me, right? Those things have value to me. I'm pretty hard on my machines, and I like the idea of having that extra warranty and extra insurance, in case I roll it over or whatever. So the calculation that we would have to do is called the present value of an annuity. I'm going to put a link below in the description, in the comment section, so you guys can go to, I think there's a calculator on the internet that you can use to do this valuation. Okay, so there's a very standard valuation. If you do any accounting classes, any business classes, you're going to learn that there's no such thing as 0% interest. There's only market interest, right? There's only it's market interest. Now you may get a slightly better rate if you have a really good history, or just a slightly better rate if you have a really good credit history, or you might get a slightly worse rate if you have a really bad credit history. The interesting thing is that with Kubota, since everybody's getting 0% financing, once you get approved, everybody's paying the same interest rate. So regardless how good your credit, whether your credit is good or bad, once you get approved, you're all paying the same interest rate wrapped up in the cost of the machine. So the calculation is the term T, right, is 7, right? So it's a period of 7 years. The interest rate R I put as 10%, okay? Because that's kind of like a medium interest rate. If you look at your credit cards, you might be paying 17%. If you look at your the mortgage on your house, you might be paying a little bit less than that. So I'm using roughly, an average rate, let's say at 10%. Okay. The number of periods, which is M, is going to be 12, because basically you're paying. You're not making one lump sum every year. You're making 12. You're paying over 12 periods. Okay. The payment is $333. I already explained that was the $28,000, the base value of this machine, divided by 84 months. So that comes up. The payment here is $333. Then there's another period that you put in. You just put in 12 when pay period comes up again. You're going to put it up 12 because again there are other options. Another thing that's going to come up is the percent growth, because you could have an annuity where, like, let's say after a certain number of periods, it goes up by a percentage rate, right? So this is a fixed $333. It doesn't increase over the period, right? Because you could have one that goes up, let's say 1% or whatever, So no, this is it. So you put 0 for growth rate on the interest, and then when you basically hit the calculate button, this comes out to roughly $20,000. Okay, so that when you remove the interest that's imputed in this $28,000, right, and you back out of it, this is a $20,000 machine in today's money. All right. Now, if I was to do, let's say, if I was doing financial statements, let's say I had a corporation that bought this machine and they were going to now reflect this on their books as an asset, right? I wouldn't record the $28,000, right? The accounting rules require me to record the $20,000, right? And then that other $8,000 I would record as interest. Okay, that's what the accounting rules are, because in the business world, there is no such thing as 0% interest. There's only market interest, and the rest is BS. Now, this doesn't reflect, this calculation that or the way I would show the value of this machine on the books of a certain corporation does not change the way the company would be making payments to Kubota. This is simply on the company's books, reflecting this machine at its true value, separating out the interest. Now, in reality, on a you know, on a machine where you have that has a base value of 28,000 and you know the interest on that is $8,000 imputed into that, I probably wouldn't even bother, okay, because it's such a small amount. But if this was a you know, like a $2 million airplane, right? I would you know, I would actually have to separate, you know, if I have an airplane, you know, that's worth $2 million that shows 0% financing. Okay, I absolutely have to separate the interest from the true value of the machine in order to reflect it on the book. So so that's that calculation that we do is called the present value of an annuity. Basically, an annuity is a series of payments. And I'm just putting this out there so you guys can understand that there's no such thing as 0% financing. You know, there's only market interest. You might get a slightly better rate or slightly worse rate. Now, here's the interesting thing is, because everybody gets 0% financing, if you're, in fact, let's say you typically get a better interest rate. Let's say you have really good credit. So you might say that, hey, you know, you could get better than 10% interest. You could get, let's say, 8% interest, or maybe 5% interest, or whatever. Well, the interesting thing is that actually works against you. The value of this machine would you know, it actually works against you, because you know, you could have went somewhere else and got this at a better price. Now, interestingly enough, when I bought this machine, I did make an offer. Actually, I did inquire. I didn't make an offer. I inquired about paying the machine outright, and they said yes, I could. I said, how deep is the discount? I hadn't done any of these calculations yet. I want to see what, you know, but I asked them how deep is the discount. They said no, there is no discount. So basically, even if you pay this machine, if you pay, you know, if you purchase this machine and you pay the entire amount up front, you're still going to pay the full amount, which includes the interest. And I guess the reason why they do it that way is because there's so few people that are willing to buy the machine and pay it up front, that they just don't even, you know, they don't even bother to come up with a separate price schedule for that. Okay, so that, you know, now personally, I'd rather be paying this over a longer period of time. A couple of reasons. Number one, for tax reasons. You know, I mean, I have my personal tax reasons for wanting to pay this over a longer period of time, the way I'm able to show this on my taxes. So that's number one. Number two, at the rate that the government is printing money, you know, even though, you know, from 2013, you know, where I said in 2013, essentially I had paid, you know, what would I say I paid? I had paid some $23,000 for a machine versus the $34,000 that I'm going to end up paying for this. You know, the government is continuing to print money at an insane level. So, you know, 7 years from now, I'm going to look back and this is going to be like, okay, you know, look how cheap it was back then. Okay, so, you know, just like back in, you know, back in 2013 when I bought this machine, it probably seemed really expensive at the time, you know, compared to like whatever, 7-8 years earlier. But yeah, when you're looking at, you know, especially in this case, this is a perfect example because I can compare the same exact machine now to, you know, 8 years ago, and I can easily see how the value of the money has changed. Not the value of the machine, the value of the money. So I hope you guys found this interesting. Okay, and like I said, this is not so much a video, you know, about Kubota credit. You know, like I said, it's a great program. I use it. I've used it twice. But it's more, it's a video about understanding that, you know, understanding the time value of money. There is no such thing as 0% interest. It is included in the price of the machine one way or another. So if you're not a member of the channel, subscribe. I'll talk to you guys soon.